Okay, so welcome back. Um, I took a trade yesterday. Well, we ended up losing about $20 yesterday. Yeah, still on the demo account though. Yeah, this is the account history. Yesterday was actually crazy though. I would have made more because I don't know if I. Let me show you all the video. Okay, so this is the video I took yesterday. Yeah, it was a long one though. So this is what happened after we swapped our sell side liquidity. We came in, tapped into that fair value gap, as you can see right there. Um, yeah, after we make that, as soon as we made an inverse, that was where I entered my trade. So as soon as we made that inverse of that fair value gap, I took my sell trade right there. And then this was a mistake I did. I had my buy limit right here, as you guys can see. But as we were pushing down, look, we took out this low on S&P 500. That was what made me close this trade because I didn't want to see any SMT. You understand what I mean? So foolishly, I clicked on the X instead of taking out one contract, and two lots were still running. So me thinking that, oh, as soon as I X this one, it takes out one. But little did I know that was not how it works. I already knew how it works, but I don't know. I was just confused maybe here. Like I was just confused because yeah, as you can see, I took out that X, not knowing that it doesn't actually cut off any lot, but two lots were still running, and price took me out, and yeah, price took me out. I actually thought I cut off 50% of my profit, but price didn't because I didn't close out 50% of my profit. Instead, I just closed out the buy limit. But yesterday we lost about $20 in total, and price hasn't been moving as volatile as it used to be. But let's just see what happens today. We can see a market structure shift or a break of structure to the downside. That'll be good because not just having the market structure shift, we're also going to inverse this fair value gap. This 1 minute fair value gap right there. Okay, so we literally just inverse this fair value gap on S&P, but we haven't done it, and we push a little bit lower. I'm taking the sell. Okay, right there. So I'm taking my sell trade right there, and then I'll take one lot out if we hit this body right there, right there, and we just aim at this low, which is literally in parallel, which is literally parallel with this fair value gap. So that's where I'll take my other lot at. And then since we have a fair value gap here, I'll just put my stops at the high of that fair value gap, or at this high. Damn. My buy stop right there. I wasn't expecting to see this reaction. Oh yeah, oh, we have a fair value gap there. Or do we? Oh, we were about to make one, but we didn't. We were about to make one, but we just went back to tap into that inverse. Yeah. But we haven't inversed the fair value gap on Nasdaq though. We can close with a body below that fair value gap. That would really be a good um, drop signal or a bearish signal, or a confluence that price to go down. Okay, yeah, that's basically what I wanted to say. Looking for the right words. Okay, but if we tap into this fair value gap before S&P, before Nasdaq, I'm gonna close one of my trade, one lot. I'm gonna close one lot. As if we tap into this before it taps into this right there. Oh, literally just did. It literally just did. I missed that. So I'm closing one lot out there. I closed out on one. Why isn't it closed for me? Okay. So I am managing one right now, and then my stops just be here. And this how I am. because we literally just tapped into that fair value gap. So who knows? Oh yeah, and we also have an inverse right here. So yeah, let's see how we go. Oh, did I? We close that one too. Oh shit, we didn't make much today, so we only made about $10 today. Yeah, but it's fine, man. It is what it is. So yeah,